Thank you for tuning in to another edition of the Vulcan Report. As you can see, this is a chart of the S&P, the E-mini S&P 500 futures contract. So far in the trading session, we're hitting a high of 2048, which is a new all-time high now for the S&P 500. If you look at this weekly chart, you can see that we're well on our way toward 2100. We should hit and break through 2100 by year end. As you can see, we're having an early Christmas rally. We first began this lift off of this spike low here made on October the 13th, and we have not looked back since. Each support level is intact. Every week we continue to lift higher, even though we kind of start out these last 2 weeks here. It's been very narrow range, but nevertheless we're still drifting higher. A lot of momentum. Look here at the daily chart. You can see a little bit better picture. Notice how, again, we spiked here, and every day we have been going up. Again, for the most part, keeping each weekly support intact. All right, and now here's your liftoff. Look at this hourly chart, man, right here. Look how this bar right here. This was insane. This was right on the what you call me. This was the lift for the economic report we had today. So that's where this came from. And the market started to move higher like 30 minutes before the announcement. And then, we just took off. You can see this parabolic bar here. We chopped around prior to that, going absolutely nowhere. Grinding people up here, people trying to day trade. And then we just broke out. And then here's a 15-minute chart breaking down what I was just showing you in the hourly chart. All right, so this is where we are. It's a nice up move from here. No downside in sight. Every time it looks like we're going to sell off, we don't. And the weekly chart tells a better picture. Each support stays intact. Look at this. Each support. Here's 1, 2, 3, 4, 5. We ran into trouble here on 6, but 6 was enough to push the market higher. Now each support, preceded the prior breakout and went higher. This one you thought that the top was in though, because it took out the prior support. We had never done that before. All the supports were intact. We never had a test of support until here. And now here we are today with here. Okay. Been working really hard to get this the commentaries for the website together. In the meantime, what I've been doing while I'm working on that is I've been tweeting. So if you're not following me on Twitter, you're definitely going to want to look at the information below underneath this video and go ahead and follow me on Twitter, because throughout the day and evening and even at night, when things come up as I'm running the algos, I'll type and tell you what I'm seeing or what have you. But my main thing is to get the commentary on the website going, because that's what's really gonna help you to see what I'm saying and be able to position yourselves accordingly. All right, so let's move on. This is the S&P. Let's take a look at oil, because oil has really been telling a story lately as to what's going on. At one point we were told back in 2008, the higher oil goes, the worse it is for the economy. Now they're flipping the script and saying the lower oil goes, it could be bad for the economy. In other words, if the price is too low, it hurts. If the price is too high, it hurts. Well, think about it. How would the price being too high hurt? Well, because it rises the energy costs, right? And it cuts into corporate profits. The more they have to spend to make profits and transport those products. And in addition to that, they say if the price is too low, it could hurt us. The only reason why they say that because the petrodollar, the petrodollar tied to oil. So if it's too low, we don't make as much because we control and run everything anyway. So you darn if you do, you darn if you don't. Bottom line is the market's going to do what it's going to do, and that's just how it is, and nothing they can do about it. Look at this weekly chart. Every buying opportunity was sold. Every buying opportunity sold. Every buying opportunity sold. Sold. All right. Terrible downside momentum. Here on the daily chart, just pretty much straight down. Hourly chart today, straight down. 15-minute chart even shows a better picture. Look at that. Just pure price. As I don't have a bunch of indicators on here or anything like that. Just raw price data. The market is weak and will continue to hit new lows. New 52-week lows, that is. And why? Just because the market is weak. There's no end in sight to the selling. The selling has not stopped. Even, you want to think it's going to go higher, but it's just not until it does. So basically, what you're going to want to do to play the oil is just continue to short all the bounces. You just want to position yourself to get into the bounce. That's all you can do right now in the crude oil. I just don't see any buying opportunities in the oil. I haven't seen buying opportunities for quite some time. It's just selling. So the next time you see uplift like this, just get ready to short it. Just get ready to get up in there. That's all you can do. Same story with the gold and silver. Let me just pull up the gold for you so you can see what I'm saying with that. It basically looks like oil. Now we got more sideways consolidation here on the weekly chart. We've gone absolutely nowhere. All we've done is expand the trading range. New low here though. Okay, new 52-week low here, and then now we're trying to bounce. Mad overhead resistance at 1250. I see this being sold just like the past rally. The past rally here, the past rally here, and the past rally here, and even here. Selling opportunity, selling opportunity, selling opportunity, selling opportunity, selling opportunity, and once again another selling opportunity. People have been calling a turn at all points and have been wrong the last 4 or 5 turns. It's not a turn. It's just a dead cat bounce. People taking profit off the last low. All right. Well, then we get into the air pockets here, and that's it. Okay. So basically, when you blow it up here on the gold on the daily chart, you can see this last uptick here a little bit better. This is the last 3 weeks of data. Here's what it looks like here. Okay. And then you have your hourly here and then the 15-minute here. So today you can see again, just like the oil, pop and slide. Pop here, slide here. So I know you see things going on in the world and the economy. You say, okay, gold is eventually going to go in a direction, but right now that direction is south. It's not ready to turn until the bottom is in, and we have not bottomed. Each time people call bottoms, they're only short-term bottoms. They're not real bottoms. Key reverse here, it's only a short-term bottom. We go right back down again. All right, reverse here, nice upsurge, but we crash right back down again. So again, overall though, no real direction, just a slow grind, if you will. It's just chopping around, grinding you up. Right when you think a bottom is in, it comes in and it eventually takes it out. Right when you think a little high is in, it'll come in and try to take that out. It's just a wild ride. Not a lot going on there. And silver is even worse. Check out the silver. Let's type that in. All right, in the silver weekly chart, straight down, man. You don't even get the pops like you did in the gold. This is just a straight down market, a downward trajectory market. That's all you see right here. And again, no end in sight. No end in sight. Look at that. You fell from the 17 down to the 15. Now you're trying to bounce, but again, it's the markets are just so damaged right now. These metals are so damaged. The oil is just it's in a trend. It's the trend is down. Bulls don't like to admit that, but the trend is down. And as a trader, you don't really care what direction the market's moving in. You just want to be on the right side of it so you can, hopefully profit and make money. And make sure that your trailing stops are done right so that when when these pops come, if you're short and these pops come like this parabolic bar here, it'll take you out. It's not necessarily a time to reverse and get long. It just means that the last short that you had is over, the profit target is hit, and then you have to sideline yourself into the next trigger. That's all that means, okay? So keep that in mind when you're following these markets, okay? That's usually the way that they're gonna move on you. All right. So remember, take what you can and give nothing back. And follow me on Twitter and also on on the blog, because that's where I'm going to be putting the commentaries as soon as I get the finishing touches done on some of the algos. All right. So thank you and have a good day.